proof keeps piling up. XRP just makes sense. It's not just you, me, or a handful of enthusiasts. Anyone who learns about it, well, except for the ever-toxic Bitcoin maxis, sees its potential. Don't believe me? Check out this headline from Crypto Basic. Bitwise CIO confirms massive demand for XRP ETF. Shocking? Not really.
I've been trading crypto successfully for over 380 days, consistently closing every month in profit. In the last 90 days alone, my followers have earned over $29,000 in profits by copying my trades. Want to see my verified stats? Click the first link in the profile description and start copying my trades for free today.
Bitwise, a rapidly growing firm, wouldn't be diving into XRP ETFs if there wasn't genuine organic demand. It's clear there is. I took a peek at their website. They're celebrating Bitcoin crossing $5 billion in assets under management. A 400% leap in the past year. That kind of growth doesn't happen by chance, and they certainly didn't achieve it by making dumb calls. They know XRP is a smart move, and let's be real, they want their share of the profits. Can you blame them? Absolutely not. Now, onto something more entertaining. Check this headline. Finance veteran Gary Cardone sells entire XRP portfolio, shares 6 reasons for his exit. Oh boy, where to start? How does this guy earn the title finance veteran when his 6 reasons read more like a personal manifesto than sound doctrine? Spoiler alert, it's a train wreck. Let's dive into the chaos, but one thing's for sure. XRP demand is here to stay, and it's only going up. First off, I don't think that's true. And honestly, it sounds like whoever wrote that might be new to investing. But hey, let's dive into it. Before we go further though, let me be clear. I'm not a financial expert, and this is definitely not financial advice. Don't go buying or selling anything because of what I say here. I'm just a crypto enthusiast who loves making YouTube videos for fun, plain and simple. Now, on to the first topic. The push for an XRP exchange-traded fund ETF is heating up. Bitwise CIO Matt Hogan recently talked about this growing demand in a CNBC interview. While Ethereum ETFs are seeing less interest than Bitcoin, XRP is gaining traction among investors. Hogan was asked about the outlook for an XRP fund, and it's clear that momentum is building. And here's something that never fails to enrage toxic Bitcoin maximalists, because, hey, it's my channel, and I can say what I want. Michael Saylor of MicroStrategy. You might have missed it, but he recently renamed his company. Does it matter much? Not really, but it's worth a mention. Not sure how the approval process went, but MicroStrategy recently rebranded to Strategy. Sleek, right? Anyway, the timing of the name change is fuzzy. It might have been around the Bitcoin ETF approval a couple of years back. According to him, though, Bitcoin is the only true money, and we'd never see an Ethereum or XRP ETF. Bold claim, right? Well, fast forward a few months and bam, Ethereum gets its ETF, with more on the way, including XRP. Like it or not, the market demands it, and regulators are starting to listen. Attorney Hogan chimed in, emphasizing the growing demand for a regulated XRP investment product in the US. He backed it up with 2 big points. First, XRP has one of the most loyal and active communities in crypto. Second, it consistently sees significant trading volumes on centralized exchanges. And let's be honest, XRP has one of the biggest, most passionate communities out there, the XRP Army. But unlike toxic maximalists, we're just regular folks who recognize value when we see it. XRP delivers real utility, it works, and it's a solid investment choice. Simple as that. No cult vibes here, just good old-fashioned practicality. From an investment perspective, it just makes sense. Now, let's talk about Bitcoin for a second. There's no denying it has a reputation for toxicity. Sure, not everyone in that community fits the mold, but the maximalist mindset over there, it's intense. For many, it's more than just an investment. It's their identity. But here's the thing. You can build a thriving community without all that drama. And that's why we're here in the XRP ecosystem. It's refreshing, isn't it? The thing is, XRP has utility. That's the glue holding this vibrant community together. If XRP didn't make sense, there wouldn't be this massive engaged network of people. It's not random. It's because XRP delivers. Let's look at the numbers. CoinMarketCap data shows $3.74 billion in XRP trading volume over the past day, $33 billion in the past week, and $162 billion over a month. For context, daily volume is now 4 times higher than what we saw last year. Given all this activity, attorney Jeremy Hogan had an insightful take. I think people would love to find a way to hold XRP in a simple, low-cost, easy to use ETP structure. Yes, ETP, not a typo. It's a category that includes ETFs. The buzz around an XRP ETF is growing, with a key driver being the SEC's shifting stance on crypto regulation. Attorney Hogan highlighted how the SEC, under the current administration, is showing more openness to new crypto assets, marking a clear departure from its stricter past approach on issues like staking. This evolving regulatory environment has sparked optimism, not just for XRP ETFs, but for other crypto-focused products like Solana ETFs as well. Notably, the SEC has 6 XRP ETF filings on its radar, from heavyweights like Bitwise, Grayscale, and WisdomTree. What's the big takeaway? The door is opening wider for investors who want exposure to the crypto market without actually buying crypto. Change is on the horizon, and it's shaping up to be an exciting time for the next wave of crypto adoption. Not everyone wants to dive into the complexities of self-custody. Let's face it, many people don't want to learn how. It's just not their thing, but they still want exposure to crypto. I actually touched on this in my last video. Just like ETFs that track the S&P 500, the crypto world is heading in the same direction. Matt Hogan summed it up perfectly. A lot of people want to make a generalized bet on crypto, and I'm hopeful we'll get that by the end of this year. He's talking about an index-style ETF that tracks large-cap cryptos, a simple, hassle-free way to jump into the market without all the heavy lifting. XRP is undoubtedly making waves, and it's clear it'll play a key role in ETFs. Imagine buying an ETF to get broad exposure to crypto, with major players like XRP leading the charge. The big deal? ETF products must be backed by the actual asset. In this case, XRP, bringing even more money flowing into it. Exciting times, right? But let's shift gears to some recent drama, or should we say comedy. Finance veteran Gary Cardone has sold his entire XRP portfolio, citing 6 reasons for his exit. While the specifics are interesting, the real hilarity has been unfolding on social media platform X. Polls asking users about their favorite crypto, with options like Bitcoin, XRP, and others, keep popping up. And guess what? XRP keeps winning, much to the dismay of Bitcoin maxes. In disbelief, they keep running more polls, convinced the results must be flawed or skewed. Yet every time, XRP emerges victorious. The response? Accusations of bot interference. It's like watching the same comedy sketch on repeat. So it turns out it's not humans driving this, it's bots. Crazy, right? But here's the thing, the XRP community absolutely dominates on X, where all these polls are happening. Honestly, I didn't expect us to win so many polls, especially since the Bitcoin community is so much bigger. There are way more Bitcoin holders than XRP holders, which, to me, screams opportunity. By the time everyone wakes up and realizes XRP's potential, the window for life-changing gains will have closed. But let's talk about Gary Cardone. You might know him. His brother Grant Cardone is a big name in the entrepreneurial world. Anyway, Gary made some waves recently with a post that racked up nearly 500,000 views. While he's been critical of XRP's decentralization, guess what? He still decided to buy in, and not just a little, he grabbed 31,000 shares of XRP shares, not the coin. Wild, right? He didn't buy the digital asset outright, he bought shares of it. Let that sink in. This is supposed to be a finance guru we're talking about. Seriously? So what's next? Did he pick up his XRP shares alongside stocks from the New York Stock Exchange that day? Sure, why not? Because, reasons. It's honestly hilarious. Now I get it, if you're new to investing, especially crypto, it's easy to mix up terms, no big deal. But for someone touted as a finance veteran, buying shares of a cryptocurrency, yeah, harder to excuse. Anyway, his average buying price was $1.45. Then, in a twist of irony, he ran a Twitter poll asking his followers which crypto they'd choose. XRP was dominating, tens of thousands of votes, over 40,000 by the last count. But guess what? Our finance pro couldn't handle it. Midway through the 24-hour poll, he just deleted it. Yep, poof, gone. Why? Maybe he wasn't thrilled with XRP's popularity or the XRP community's straightforward responses. Maybe it's because he was clinging to Bitcoin like it's the holy grail of crypto. Who knows? Either way, deleting the poll screams sour grapes. And now, he's stuck in the Bitcoin echo chamber because Bitcoin's the one, right? Again, reasons. Once you're deep in the Bitcoin bubble, it's hard to break out, right? Case in point, Gary Cardone seems to be suffering from a serious case of XRP derangement syndrome. Last night, he shared a dramatic post about selling his XRP, complete with his wisdom on why he made the move. Oh, Gary, please enlighten us with the brilliance of your galaxy brain. He shared 6 rules he claims to live by. Rules that sound like they were whipped up in 5 minutes. They're redundant, disjointed, and honestly pretty ridiculous. It feels like something a crypto newbie would write, not some seasoned guru. Here's the kicker. Gary proudly announced he dumped his XRP at $2.71. Hey, at least he made a profit, right? But the negativity didn't end there. He added, I genuinely hope the XRP army gets stupid rich. I don't think you will, but my best hopium is with you. Oh, Gary, who exactly are you talking to? Because, spoiler alert, some of us are part of that XRP army you're casting doubt on. I'm not getting rich overnight, but let me tell you something. There are countless people out there who've been holding XRP for years, some even from the very beginning. A lot of us don't need it to skyrocket to get absolutely filthy rich. Did you know that? Because it's true. XRP has been around for 12 years now, and plenty of early adopters already struck gold in the first cycle, when it shot up from less than half a penny to over $3. Sure, last cycle was a bust thanks to the SEC drama, but this time feels different. Take me, for example. My average buy-in price for XRP is 25 cents. I'm not here expecting a miracle. I've been patiently accumulating. And I'm far from alone. This isn't some get-rich-quick scheme or a fleeting trend. Our community is massive, loyal, and has been here for the long haul. So anyone doubting us clearly doesn't understand the scale of what we're part of. This has been a thing for over a decade, yet he thinks it won't go higher? Oh, he's in for a rude awakening. Let me tell you, someone who actually knows what they're doing, Matt Hogan from Bitwise, completely disagrees with that take. As for XRP, yeah, it's all about number go up in the end. And then there's this. My best hopium to all of you. Oh, how sweet. So sincere. Thanks for rooting for my riches, Gear Bear. But here's where it gets interesting. He claims, my 40 years of experience have taught me lessons I don't violate. Sounds legit, right? Conviction, expertise, he's been at this forever. Except, then comes rule number 1. If I can't understand the supply and demand dynamics and don't have a serious edge, I don't get involved. Wait, what? Holy hell. I read that and immediately thought, does this guy even know the internet exists? Maybe I'm wrong. Maybe he doesn't even use the internet. Maybe he's relying on a hired hand with Wi-Fi access to type this out. Or better yet, carrier pigeons bringing updates from the outside world. Who knows? But seriously, this logic feels like it's stuck in the Stone Age. Could be, right? Maybe. Or maybe he's Googling as he types, trying to figure out supply and demand dynamics. Did you know the XRP ledger is decentralized? It's a public blockchain where you can actually see wallet holdings and quantities. Sure, it's anonymous, no names attached, but the data is right there. Did you know you can track circulating supply? Ever heard of CoinMarketCap, Live Coin Watch? No? Really? Is this all new for you? So you're saying you don't get XRP supply and demand dynamics? You couldn't figure out how much XRP exchanges hold, despite them being pretty open about it. Here's the kicker. This is all public knowledge, crystal clear, and yet you bought XRP, then sold it. Why? Because you didn't understand its supply and demand? Why'd you buy it in the first place then? You've got 40 years of experience, right? But what happened here? Did you process any of this before posting? Honestly, I'm doubtful. Maybe you were just out of your mind hammered. Who knows? What's going on? No clue. But rule number 1 here, it's not looking good. And no, it doesn't get better. Let's dive into rule 2, straight from finance veteran Gary Cardone. If others can't explain it clearly or draw it on a whiteboard, don't do it. Fair enough, right? But here's where it gets tricky. If people can't explain it, does that automatically mean it's a bad idea? Or are they just not great at explaining? Take Bitcoin, for example. How dumbed down do we need to go? Should we stop with Bitcoin as digital money? Or do we take a detour into distributed ledgers, decentralization, and counterparty risk? At what point does clarity get lost in complexity? Now, let's try this for XRP. The creators of XRP saw Bitcoin's scaling issues and built a new version that's faster, cheaper, and more efficient. Done. Real-time settlements, near zero transaction fees, and it actually fulfills Satoshi's vision of peer-to-peer cash. Cool, right? So Gary, how much detail do you need? Because honestly, this stuff isn't rocket science. It's just a better Bitcoin with all the bells and whistles Bitcoin wishes it had. Simple enough for a whiteboard? You decide. Let's break this down. You didn't have the internet to help figure any of this out, right? Yet here we are. He says, if someone can't explain it clearly or draw it on a whiteboard, don't do it. Fair enough. But, do you actually need a whiteboard for this? Do you even understand the words I'm saying right now? If not, why not? This isn't rocket science. And sure, if others can't explain it, that might not help your understanding. But here's an idea. How about you go learn it yourself, then share the knowledge? Is that not a better rule to live by? 40 years of experience taught you this, huh? Are you sure? Because it's giving me secondhand embarrassment. Anyway, let's move on to Rule 3. What's Rule 3, Gare Bear? Oh, this one's a gem. Avoid people who know the price of everything but the value of nothing. Hilarious, considering you just showed us you don't understand XRP or its ecosystem, yet you know the market price. You publicly shared that you bought it at $1.45 and sold it at $2.71. So, yeah, you know the price. But do you get the value? That's the real question. He knows the price, but misses the point entirely when it comes to value. Price and value aren't the same thing, unless we're talking market value, which sure aligns with price. But real value? That's about utility, especially in the crypto world. And Gary, you just told us to avoid people who know the price of everything, but the value of nothing. Are you describing yourself? Because that's exactly what it sounds like. Hilarious. I love this. You've got to start a series of these ridiculous rules. Rules so incoherent they boomerang back to highlight your own contradictions. I'd make an entire channel just to dissect them. Pure gold. Now, on to Rule 4. Never confuse short-term noise with a long-term investment plan and goal. Don't worry, Gary, I won't. Because guess what? You are the noise. XRP has been live for 12 years. That's long-term. People like me have held it for 7 years. That's commitment. Meanwhile, you've been around for what? A few months? November? December? You're the new guy. You're the short-term thinker. Where were you when XRP was 25 cents? Nowhere to be found. For a supposed finance veteran, you sure missed the memo back then. You only showed up when the price went up. Exactly the type of person I've been calling out for years. You're showing classic new investor behavior, chasing shiny things and green candles. That's short-term noise, not us. Let's talk about Rule 5, though. Great wealth is built through highly consolidated bets held over long periods of time. Sounds good, right? Then why'd you sell after just a few months, Gary? Doesn't quite add up, does it? Gary's rules sound like 40 years of wisdom wrapped in a shiny package. You'd think you're about to uncover some alpha, some sage advice, but then you realize he's breaking his own rules, literally doing yesterday what he's telling others not to do today. Great wealth comes from long-term bets, he preaches, and yet here we are. Here's the kicker. Most people don't get rich from highly concentrated bets. Real wealth for the average person comes from consistent, broad exposure to markets. Think ETFs and the S&P 500. Simple, steady, long-term investing wins every time. Individual stock picking? Not necessary. And in crypto, the same principle applies. Broad exposure over time makes sense. Sure, XRP is my largest holding. It's my favorite cryptocurrency. But advising people to make concentrated bets and magically pick the winners? That's a losing strategy for most. The real key? Invest consistently, stay diversified, and let time do the heavy lifting. So you're telling people, yeah, go do that, right? Let's pause for a second. When you're talking about the market cap of all these coins, you're really looking at the collective judgment of people around the world. It's a global vote with dollars or whatever fiat currency cast as ballots. Market cap rankings? Simple. The more money pumped into a coin, the higher it climbs. That's it. So when someone tells you to make highly consolidated bets, what they're saying is to just ignore the collective wisdom of the market and roll with their blanket advice. That's the plan? Really? Outthink the market by following some one-liner? Here's the thing about crypto. Yes, you do need to create your own version of an index if you want broad exposure. Totally fair. It's not as simple as buying an S&P 500 ETF. You'll need to make some picks, sure. But why on earth would XRP not be part of that? The advice being thrown around here is laughably bad. It's a masterclass in what not to do. Seriously, this isn't advice anyone should follow. It's just noise. And then there's rule number 6. Never follow the crowd. Never. Oh, but wait. Gary, let's call him that. If that's so important, why isn't it rule number 1? You made the list, right? Just reorder it if it matters that much. Ever heard of copy-paste? Probably not. If I mentioned it, you'd probably picture scissors and glue. And the irony? Gary did follow the crowd. Of course he did. He knew about XRP. He'd seen coin market cap. But he waited. He waited until the crowd got hyped and the price shot up to $1.45 instead of buying it at 50 cents when he could have. So much for never following the crowd, huh? Maybe revisit the last 40 years, Gary. Learn something this time. because it's pretty clear you haven't yet. And this is why I find this so entertaining. Gary Cardone made a post, and Bobby, who's got a track record for accurately predicting XRP's breakout, hit him with a perfect reply. Bobby said, "Dude, you bought green candles. I don't remember you saying a word about XRP when it was sub 25 cents during gobble season. You're as retail as they come. Spot on." This is classic new investor behavior, the kind of thing you'd expect from someone just dipping their toes into crypto. But here's the kicker. Gary shared a screenshot of his XRP sell order, worth $81,300. Problem is, it looks like he tried to scribble out parts of it using Microsoft Paint. Yes, Paint. Another sharp-eyed account noticed he forgot to mask the bottom section, revealing the percentage of his portfolio in USD. A little math later, and it's clear his account's worth over $600,000. Finance veteran, you say? Yeah, sure. Definitely not buying that. Here's the thing. I believe XRP's future is bright. Sure, there will be pullbacks and bubbles, just like Bitcoin's history. But give it a decade or two, and XRP will thrive. It's functional, has utility, and was an early mover. The Bitcoin purists love to tout these same ideals, but let's be honest. Bitcoin's the pet rock of crypto. It exists because it was first. That's it. No real-world functionality, just vibes. Anyway, back to Gary. Is this the final chapter of the Gary Cardone saga? Probably not. He fancies himself a crypto guru, yet his behavior screams rookie mistake. And look, I'm no guru myself, just an average guy good at sticking to the basics. I don't panic sell, I don't FOMO, and I don't let emotions rule my decisions. It's really not rocket science. But Gary, he FOMO'd into XRP without understanding it, got mad at the community, and sold out. Classic. So here's hoping we've seen the end of this drama. But honestly, if he keeps saying ridiculous stuff, it's hard not to find it entertaining. Just don't take financial advice from people like this, and definitely don't take it from me either. I'm just here to call out the nonsense.